Welcome back to Squawk. In an interview that was conducted on Tuesday but just published this morning at 6 a.m., President Trump telling Time magazine that he's still convinced tariffs are necessary. And he said he considered a total victory if the U.S. still had tariffs as high as 50% on foreign imports a year from now. Dow futures ticked lower since the interview was published on China. President Trump saying that President Xi has called him and that his administration is in active talks with Beijing to strike a deal. He said he expects to have a full slate of deals announced over the next 3 to 4 weeks. Of course, at the same time, we've heard from China suggesting that there are no talks going on. So a lot to try to figure out what's really going on.
Our next guest has been on the front lines of managing the U.S.-China relationship, and joining us right now is Nicholas Burns. He served as U.S. ambassador to China in the Biden administration and has served 6 presidents, both Republican and Democrat, in his decades-long foreign service career. He's now a professor at Harvard's Belfer Center. And Ambassador, thank you very much for being with us this morning.
Thank you.
What do you think is happening? Read between the lines for us here on the conflicts as to whether or not there are negotiations that are taking place.
You know, I think that both governments are trying to figure out how do we climb down from the triple-digit tariff battle that they're in. You know, I think that neither economy and really neither government can sustain a trade war like this at this volume and this depth of seriousness for several months. So I would anticipate that both sides would want to reach out to each other, probably quietly, and begin the process of trying to define, is there a trade deal in the future? And I think the logic for each of them and self-interest from each of them will push them towards that. But the problem is going to be how to negotiate this, how to do it effectively, because I think it will take some time.
We just heard from this Time interview with the president that was released just in the last hour and a half or so that he would like to see, the president would like to see tariffs as high as 50% a year from now, that he could see that being out there. The futures did sell off a little bit on that. We were down by about 230 points. They've come back somewhat to down 150. This was an interview that was done on Tuesday, and the messaging coming out of the White House can change pretty rapidly. When you get your arms around it, the idea of a 50% tariff, is that sustainable for the two countries versus the 145% today?
It would be enormously harmful to both economies if that's going to be the level going forward for the next couple of years. You know, China's our third largest trade partner. Our trade volume was $642 billion last year in goods and services. For China, we're the largest export market. And so 50 to 60% tariffs would have a significant cut in export in the trade balance between the two countries. There are upwards of 20 to 25 million Chinese workers who depend on making things, manufacturing, to trade with the United States. There are about 1 million Americans whose jobs depend on trade with China. So those levels, and those were the levels that candidate Trump talked about in the 2024 election, 50 to 60%, I think would be highly destructive to this relationship. And strategically, what both countries have to figure out, particularly the United States, is, do we want to see a decoupling of these two economies? In my view, that would be highly disadvantageous for both of us, for the United States especially, but also for the global economy. So no, I don't think that's a logical landing point for these upcoming negotiations.
Ambassador, here's the question, though. It's a leverage question, and it's a timing question. Clearly, we are the biggest economy in the world. I would imagine, hopefully, on a long-term basis, you would think that we would have leverage. We would have, there would be a good reason for folks to ultimately invest in us and to make a deal with us. Having said that, the short-term pressures that we're facing, the way the market works, the way our democracy works, the way voting works, puts an enormous pressure on us in certain ways to make a deal or not make a deal. Maybe you don't think so. I don't know. How do you see those pressures, and how much patience can we have versus how much patience can the Chinese have?
Well, Andrew, I think your calculation is correct. I mean, there are short-term pressures on President Trump and the United States, as there were on President Biden when he was in office. There are market pressures and political pressures here in the U.S. in our open democratic society that obviously are not impinging upon the strategy of Xi Jinping. But having said that, Xi Jinping, I think, needs a deal with the United States. His economy is slowing down. A lot of people don't think they grew by 5% GDP growth last year. It was more like 3.5 or 3.7. They have a significant problem with foreign direct investment. It was down by 32% last year. The property crisis bubble is still affecting the economy. So I think that the pressure works the other way as well. Xi Jinping needs a deal to stabilize the economy. They don't want to have a prolonged tariff war with the United States. And so that gives me a little bit of encouragement to think that both sides, logic would say, need negotiations and need some kind of a deal, not at 50% or 60% tariffs, but somewhat lower in the future. And I'd also like to say, China has been portraying itself in the last few weeks as the responsible party here. But China is not a victim. China's been the major disruptor in the international trade system for well over 2 decades now. And that's why President Biden raised tariffs on EVs 100% last year, 11 months ago, on semiconductors, on lithium batteries. And it's understandable that the Trump administration wants to have a hard-edged policy here to try to make sure that the Chinese don't take advantage of us.
Is this a trade war that you think we should be fighting specifically and only with China?
I think the better strategy for the United States would have been not launch a tariff war against Japan and South Korea and the European Union. All those countries have essentially the same interests that we do. We're trying to protect ourselves from unfair Chinese trading practices. And had we started with those countries on our side, that's about 60% of global GDP. That would have given us enormous leverage. And right now we don't have that particular leverage because we're fighting a tariff war with our closest allies. So I think that was a tactical mistake a couple of weeks ago.
Well, I'm sorry, you said Japan, South Korea. What was the third country?
The European Union.
Oh, and the EU.
Right.
So
yeah.
Is there a chance for a mulligan of sorts with this? Is there a chance to say, okay, we're going to do quick trade deals with Japan, South Korea, see who else we can work out, Canada, Mexico, and then turn around and focus on China very specifically after these new deals that President Trump can say he's gotten?
I would hope there is that opportunity. I was encouraged that the Treasury Secretary Scott Bessent said exactly that about 10 days ago, that they wanted to work now speedily with the Japanese, the South Koreans, and I hope with the EU to try to have early trade agreements with them, if that's possible, to bring them over to our side. The Chinese, I think, don't understand how much their dumping of manufactured products has unsettled global markets. One of the things the EU is concerned about now is if China is shut out of the U.S. market, China might try to flood the EU market with lower priced goods, dumping goods. They're producing 2.5 times the Chinese domestic demand in EVs and solar panels and lithium batteries and steel and robotics. So I think actually the United States would have a lot of leverage if we could bring those allies to our side to compete with the Chinese in a very strong way at these negotiations.
Well, it sounds like it's a lose-lose situation for China. If they've been dumping this much on the market, 2.5 times in all of those sectors from what they can possibly produce, in order for them to reach an agreement with us and potentially our trading allies on this, they're going to have to cut production, and that means more job loss in China. Is this a lose-lose no matter what happens for China?
Well, I think this is the pressure point on the Chinese. Just in the last year, a lot of different countries have raised tariffs on China. India, South Africa, Brazil, Colombia, Peru, Canada, Mexico, the United States, the EU. The world is saying to the Chinese, if you think you can grow by ramping up your manufactured exports and selling them at lower prices to the rest of the world, it's not going to happen. The Trump administration should be taking advantage of this by bringing some of these other countries to our side, but you can't do that if you've launched tariff wars against our natural allies. And I think that is something that can be corrected with a lot of hard work and quick work, but it's necessary.
Ambassador Burns, thank you for joining us this morning.
Great pleasure. Thank you.
Coming up in the next hour, China hawk naming capitals, Kyle Bass on the trade battle between Washington and Beijing, and if he's seeing a crisis of confidence in America. We're going to talk to him about that as we head to a break. Check out some of the names in the chip sector. Squawk Box coming right back after this.